Okay. Okay. Yeah, good afternoon, everyone. We'll begin our session.
Yeah,
Prana Shah would be the moderator. Please, Prana.
Thank you so much, Mr. Jayesh Gogri. It's our pleasure, GSC. And our platform's name is GSC. And today, under the banner of GCS, we are holding this program wherein we are going to demystify the budget, Union Budget 2022 to 2023. First of all, let me give you some brief introduction about the company, and then let us move towards the discussion over the current budget, wherein everybody is saying, and definitely we'll hear it from all our experts also, that whether this is a budget wherein we are going to see some change in our economy and our position across world will be seen, and maybe we will take it further to 25 years. Let us see, let us hear it from the experts. Friends, this is the company called as GCF, GSC Crossborder Solutions Pvt. Limited. We are here to help you out with respect to support on the business trends. In case you intend to set up your businesses in India, or you want to grow or optimize your business transactions in India, then we are here to support you. We will be able to provide you services with respect to the setup and finances, and also functional related aspects. We can discuss about some outsourcing possibilities as well. And that is where this GCS will be able to become your support pillar for business operations. Friends, with this brief background about the company, let me give the introduction about today's speaker. The first speaker is Mr. Mahendra Agrawal ji. He is a mechanical engineer, a graduate from the NIT Jamshedpur, and he is also a postgraduate from doing the industrial engineering from Purdue University, USA. He is having an experience, a diversified experience of more than 40 years into the field of managing the businesses of consumer durables, industrial products, infrastructure projects, and whatnot. He has been with Reliance for more than 15 years. He was the first executive director of the Silvassa unit of Reliance Group, a greenfield polyester yarn manufacturing facility, which he has been able to develop in the very short span of time. He has also made the global scale of the Reliance Logistics Limited, which is an integrated pan-India logistics service provider. Currently, he is a director of India Money Mart, which is a tech-enabled online platform which brings the borrowers and lenders together. He has been instrumental in turning various SIC units in record time, and he has a passion of new and futuristic businesses for growing them and to take them further to the next level. Being an active Rotarian and a visionary, he is bringing his vast knowledge and experience and network to this venture, which is called as GCS. And definitely today we will hear from him about the macroeconomical angle from this budget. Friends, let me introduce the other speakers for today. The next speaker is CA Ashok Batra. He is an LLB as well as a chartered accountant. He holds the privilege of completing his graduation from Sri Ram College of Commerce from Delhi University. He has been practicing since last 4 decades, very, very regular in tribunal matters. He has not only earmarked his position in direct taxes, he has then ventured into a territory which is indirect taxes. He has outstandingly represented ICAI in multiple capacities as an orator, as a writer, as a member of ICAI committee, New Delhi, and he has litigated various matters in tribunal. now we will move towards Mr. Just a minute. Yes. Now I would like to introduce CA Jayesh Gogri. Jayesh Gogri is a qualified chartered accountant and he is an upright entrepreneur having experience of advising corporates across India. He is bringing his experience of 2 decades on board. His focus has been on advisory, litigation, and coaching in the areas of taxation, finance, systems. He was a vice president of indirect taxes at SKP Crossborder Consulting, as well as a partner at MZSK, now BDO. He is currently the managing director of GSC Intime Services Pvt Limited. Banking, real estate, fertilizers, chemicals, agriculture, logistic, engineering, pharmaceuticals, and various other sectors are catered by him in terms of advices, whether it is international or a national matter. With his out-of-box thinking and business acumen, and also the passion for solutions, he has been a pathfinder to many business organizations across India. Let me have a privilege to now introduce CA Arun Kumar Agrawalji. He's a qualified chartered accountant and he is having a 2 decades long experience in the area of indirect taxation. He has been regularly representing trade and industry before the government and numerous forums also on indirect taxes. Presently, he is the director of ARS Management Consultancy Pvt Limited, which is a leading management consultancy house in the field of indirect taxation, namely the VAT, and then now it is GST. He is regularly a corporate trainer also and a visiting faculty on indirect taxes for the departmental officials, revenue departments, and various universities and institutes. He has contributed 1 book relating to West Bengal VAT and practical guide on West Bengal VAT audit. He has also been regularly appearing in print and electronic media. I mean, with the help of his vast network, he brings in the excellent connectivity to many medium and large corporates. Now let me discuss about the budget. Friends, this is a budget wherein we have understood that ease of doing business in India and make in India, both are being promoted. We would like to now move to Mahendra Sarji quickly to understand from macroeconomic angle that what all changes and what all future do you see in terms of economy through this Union Budget 2022-23. Mahendra Agrawalji, we welcome you all and we welcome entire audience also. Please, Mahendra Agrawalji.
Good afternoon. Thank you, Prerana. This budget, of course, has been, I'm sure everybody has studied the budget and they are aware of the salient features of the budget. These 2 years have been pretty difficult, not only for this country, not only for India, but for various countries. And we have also suffered, everybody else has suffered. And the growth, the GDP, all these things have taken a backseat. Now, everywhere the countries have gone back, the economy has gone back by a couple of years. And now we should be in a hurry. We should try to accelerate the process so that we can gain the lost ground. And that, I presume, has been the main focus of this budget. Because, of course, Atmanirbhar Bharat, as Prerana rightly said, that made in India, that has been definitely a focus of this government since a long time. And especially now, this budget definitely gives a lot of encouragement to Atmanirbhar Bharat. The last 2 years, the government was busy in protecting the supply side so that there is no suffering to the masses. And they gave a lot of loan moratoriums. They provided a lot of liquidity to the businesses so that at least they can sustain themselves during this difficult time. But now, since the recovery has started, it is now visible. So the government spending has also started picking up. So we require some kind of demand stimulus. And I understand that this budget is definitely providing a kind of demand stimulus which can take the GDP or the growth forward at a much faster speed. Now, but how can you provide a demand stimulus in these difficult times? Now, if you have either you can have a very loose fiscal policy where there is a lot of liquidity available in the market, but we have to balance the liquidity with the inflation. That is also a big challenge. So the government has taken that challenge and made a balance that the fiscal deficit they have taken at around 6.8%, which will gradually come down to about 4.5% in 3-4 years time. So that we do, and that definitely puts a lot of pressure, for inflation, as well as there is a lot of money available in the market, but this also puts a lot of pressure on the government's finances, because today the interest component itself becomes more than 50% of the total expenditure of the government. Now, how this has to be gradually maybe brought down. So that is the reason the government plans to bring down this fiscal deficit without affecting the government expenditure or public expenditure in next 4 to 5 years time. And that is why they are aiming at a GDP growth, a nominal GDP growth of 14 to 15%, and to increase business in the market, to provide even employment to the people. There is tremendous the government has taken an important task of creating huge infrastructure, because if we develop infrastructure during these times, this will not only provide a lot of employment to the people, but this will also increase, or this will have a cascading effect on the economy, and this will create new avenues of business for many people. For the first time, I think so much emphasis is also being given to, though it has been there, public-private partnership, but a lot of emphasis has been given on public-private partnership. A lot of private investment is being encouraged in infrastructure. Government has, Gati Shakti, a Prime Minister's Gati Shakti program has been launched, which is basically, I am happy that it is giving tremendous importance to logistics and logistics infrastructure, whether it is rail, whether it is road, whether it is construction of highways, or ports, airports, or even logistics centers, or logistics, lot of multimodal logistic parks. Because logistics today is the biggest spend in the services sector in the country. It is 11 to 11.5% of GDP. That, compared to other developing countries where the logistics spend about 7 to 8% GDP, spending 11% on logistics means our logistics system is inefficient. Now, if we can improve the efficiency, create infrastructure, bring down the cost, this will directly add to the GDP of the country. So that is a very important step that the government taking. Another important thing where 60-65% of people of this country are employed, that is in the field of agriculture. There is a lot of importance being given in modernization to agriculture, and especially to reduce to increase, of course, infrastructure, agricultural infrastructure also, so that there is a lot of wastage which is happening today can get reduced. You see, from farm to fork, it is estimated that in case of in case of fruits and vegetable and all these kind of things, there is 30 to 35% wastage. Now, if logistics of food supply chain is developed, and for which a lot of investment will be required, and agriculture is modernized, this will not only reduce the cost of production, but will also improve the margins, the profit in agriculture, and agriculture can become a good paying business. So that is a thing that the government is putting a lot of stress upon. One is skill development, because today we may have a lot of educated people, degree holders, but providing specific skills so that they become employable is also very important. So this time government has put a lot of given a lot of importance to skill development, and this is definitely a step in the right direction. This may change the entire way education is being looked at in this country, because specific skills are definitely very important for overall growth. Then definitely health, as we have seen in the rural areas, specifically during this difficult time, health availability of proper health care was a major issue. Now this time, both in rural as well as in urban area, lot of importance is being given, lot of expenditure has been planned to develop infrastructure in this sector also. Of course, welfare sector is another important sector where government has to provide funds in different schemes, so that the people get employed, they have some kind of income, productive income, where they which they can sustain. So that is also has been taken care of. So I think it is an overall balanced budget. It is definitely a growth budget. Lot of importance is being given to Made in India, Atmanirbhar Bharat, and definitely the vision of government to take this country to a $5 trillion economy in 4 to 5 years time, okay, is taking shape. I am sure, I feel that these 2 years have been bad. If we do not have accelerate at a much faster pace, then this target of 2025 may be missed, of making it a $5 trillion economy. So I hope that both the government as well as businesses, as well as various sectors of economy, they perform well. The budget is giving a lot of fiscal stimulus. Full advantage should be taken. Even a lot of productivity linked incentives are being given in the budget. I think this is also happening on this large scale at a first time, that so much fund has been allotted to give incentive related to productivity and efficiency, because productivity and efficiency are very important in reducing our cost of production, making us more competitive, not only in India, but worldwide, so that we can become a true global economy. So with this, back to Prerana, and definitely there is a lot of one more thing. Yes, we see that there is a lot of buoyancy in the revenue in recent times. GST collections have exceeded 1.5 lakh crores. This definitely shows that there is a growth in economy. Of course, details about this tax buoyancy, how it is going to help government as well as businesses for further growth. All these things will be taken up in more detail by our eminent experts. So with this, back to Prerna.
Thank you so much, Mahendraji, for your wonderful comments. As we understand, this is a balanced budget, but definitely a growth-oriented budget, wherein we are going to see in future at least 25 years ahead of our times, as we discussed. With this, now let us move to the main topic of the day, wherein we wanted to discuss about the GST proposals which have come from the stalwarts of the profession themselves. As Mahendraji rightly pointed out, GST revenue collections have been increasing day by day, and the finance minister herself has pointed out during the budget speech that in the January month itself, it was the second highest or the third highest collection out of the, after the pandemic has completed. So it was around 1 crore 38 lakhs, a monthly collection in the month of January that has been done under the GST law, and which is again a path-breaking figure. And therefore, we see that, yes, definitely we can see growth perspectives even after the pandemic is over. Now it's the time that we bounce back. The entire economy is there to bounce back on us. Now with this, we would now like to hear the views from Mr. Jayesh Gogri on various important aspects relating to refunds, relating to e-way bills. There has been a lot of amendments, Jayesh ji, on this front, on the front of GST, there have been very important changes also in the recent past. From the 1st January 2022, there were various important amendments which have undergone a substantial change. And now we understand that from this budget also, there are a lot of amendments which have taken place. We have divided our session in three brackets. A few of the sections will be dealt by Jayesh Gogri. Then it will be Mr. Ashok Batra, who will be taking care of few of the sections, important sections with respect to 1, 3B amendments also. And then it would be Mr. Arun Agrawalji, who will be talking about some of the ITC related aspects and interest related aspects. Over to you, Jayeshji, to talk about the refund and other important matters wherein there have been changes in this current budget or proposals which have been put forth. Jayeshji.
Yeah, thank you, Prerna. Thanks a lot for, first of all, your kind words of introduction. And I'm also thankful to Mahendra Agrawalji, who gave us a macro view about the economy and some of the important proposals which are there. So coming to the specific proposals which are connected to the tax provisions, may be a bit dry, but I think as business entities, these are more relevant for the business entities as well as the CFOs and the tax professionals. So therefore, we will try to see that what are the proposals. If you see that in total, Madam Nirmala Sitharaman had given only 3 minutes in the budget to talk about GST, out of which probably 1 minute was devoted to the good collections in the GST and 2 minutes were devoted for certain changes. But if we go through those amendments, we realize that, okay, there is a lot of fine print. There is something between the lines to be read. And we will try to understand. Of course, after me, Batraji is also going to deliberate and point out various fine kind of print which is there. So he's going to deliberate on that. And Mr. Advocate, Senior Advocate Raghuraman sir also may join if his court gets over by then. So friends, let's begin with the important amendments which are there in the current provisions, and I'll take you through all the amendments. Certain amendments which are allotted to me quickly. Now, first of all, the first amendment is there is a power which has been given to the authorities, okay, which is already there. Normally, they had the power to withhold refund. So, say for example, if you have got certain refunds to be claimed from the authorities, subject to certain terms conditions, if that refund is available, it will be granted to you. However, if you have got certain pendency of certain dues, on the other hand, you have got certain liabilities to be paid off pertaining to GST, then they have got powers to adjust that refund against those liabilities. Now, what is the amendment which has been made? Now, prior to making this amendment, only the refund which is pertaining to input tax credit was allowed to be adjusted against those pending dues. But now the proposed amendment says that, okay, now all sorts of refunds, may it be pertaining to your export related refund where you have paid taxes, or maybe pertaining to even your cash related refund, but all those sorts of refunds can be held up, can be adjusted against your liabilities, which is there. So this is the first amendment. What could be the takeaway for us? That first of all, as a business entity or as a tax professional, one should ensure that, of course, on the one hand, you will be anticipating, having filed the refund claims, that you will be anticipating certain amounts to come from the government. On the other hand, you need to be very vigilant that are there any tax dues which have been raised by the GST authorities. Many times it happens that the tax dues are not normally communicated through emails or proper SOCOS notices coming by post. They are simply posted over the GSTN portal. So one should also take care of those kind of actions where simply certain notices have been posted over the portal where the time limit has gone and that has resulted into the confirmation of demand. So one should be now very vigilant if you are a regular filer of refund or you are expecting a huge refund. First of all, are there any kind of liabilities which are there on the portal? So you should keep a regular watch. And then if at all you find that there are certain pending dues, you need to address it well. maybe like you can take the route of adjudication, appeals, whatever is the stage of the demand. Depending upon that, unless you take those appropriate actions, it is quite likely that on one hand you will be expecting a refund, on the other hand the government would be appropriating those kind of refunds against some unknown tax liabilities. So these are the important takeaways of this amendment. Coming to the next, certain clarity has been provided as far as claiming refund for the supplies made to SEZ based units. Now, earlier it was not known. See, normally to claim refund, the time limit prescribed is 2 years. Now, in particular, wherever like one was supplying to zero rated supply, the SEZs, then it was not known that when to count those 2 years from, whether from the date of making supply to SEZ, whether from the date of filing return, whether from the date of payment of taxes. And in the absence of clarity, many people used to take that, okay, if there is no clarity, let me count this limitation of 2 years from the date of payment of taxes. Now that has been clarified that this 2 years meter would start reckon from the date of filing of relevant return. So if there is exports in the month of February 2022, the moment you file those, the due date of that February would be say 20th March 22. So from 20th March onwards, this 2 years would be counted, within which you will have to lodge your refund claim. So this is another amendment. Now there is one important amendment, which is pertaining to e-way bills. And section 129, which deals with this e-way bills, have been amended to a great extent. Now it's very important to note this amendment, and also the key takeaways from this amendment is that as of now, if say for example you are moving certain goods are being transported from one place to another, and if there is no accompanying e-way bill, then there was a provision which says that penalty equal to 100% can be 100% of the tax. So if tax amount is say for example 50,000 rupees, then the penalty also can be levied up to 50,000 rupees. Now if the goods are say for example exempted and there is no tax payable, then too the provision said that okay, 2% of the value of the goods would be collected as a penalty. Okay, and this was the provision which was going forward. And say for example, this was like when the owner of the goods comes forward, and where there was no owner of goods which was coming forward to get the goods released, then it was providing that 50% of the value of the goods would be considered to be the penalty in case of taxable goods, and in case of exempted goods, it will be 5% of the value. Now, of course, this 5% or 2% was subject to 25,000 rupees, okay, whichever is less. Accordingly, this was the penalty. Now, let's see the amendment. Now it says, instead of that 100% of tax, they are saying that if the goods are moving without the e-way bill, they'll be first of all detained and seized, and they will be released only when you are making payment of 200% of tax. So as again 100% of tax, it is 200% of tax. Okay. Now for exempted goods, it is same. There is no difference. Okay. And for where the owner of the goods does not come forward, there also it's the 50% of the value of the goods. But if the owner of the goods comes forward, then the penalty would be 200% of the tax. Now, friends, one particular thing which I would like to tell you, this is just a tabular form of whatever we have discussed. That earlier one was supposed to pay tax plus penalty. Penalty was 100%, okay, to get the goods released. Now there is no need of payment of taxes, but one will have to pay penalty of 200%. Okay, and for the tax, like there could be some maybe different provisions or different proceedings under maybe 130 or some other provisions if there is no payment of tax. Now the penalty which was earlier 100% has been increased to 200%. Now if you really compare with the other provisions of law, even if you consider section 130, which is like where there is a movement of goods with an intention to evade payment of taxes. Or there is one more section where it says that there was some mala fide intention, and if you have got that bad intention to eat away the GST, to evade the GST, then the maximum penalty is 100%. Now, if you see this section 129, even if there is no mala fides, by mistake, maybe you forgot to carry your e-way bill, or maybe the e-way bill which was there, transporter could not generate, or maybe it carried certain errors or issues, or maybe it would have expired by some time, maybe because of traffic jams or whatever different issues. For simply that reason also, you could be penalized for 200% unless you pay that penalty. Unless you pay that penalty, your goods will not be released. Now see the scenario where on the one side, like there is a mala fide intention, one wants to evade taxes, penalty is 100%. On the other hand, there is some error, some lacuna for one document, which is called as e-way bill. And friends, you will be surprised that if you see the entire GST Act, there is no concept called e-way bill. It talks about certain documents to be carried by the transporter, etc. But it doesn't specifically talk about e-way bill. It finds only place somewhere in rules. Now, for not following rules, you are penalized for 200%. And for not following the act, you are penalized up to 100%. Now, this is very, very draconian provision. We'll see that what to do. Of course, time limit for issuance of notice, etc., also has been brought down. In a way, it's good that within 7 days, he will serve you a notice, and within 7 days, you'll have to lodge a reply. But imagine a situation that for 15 days, you are out of the city or out of the country for some matter. Okay, you're not there. Then within this 15 days, entire case would be decided. Okay, because within 7 days, they will serve the notice. Within 7 days, they'll expect your reply. And on the 15th day, they'll pass the order, officer. So in such a situation, it would also mean a very hasty proceedings. There won't be any plea for the principles of natural justice, etc., etc. So this is, in a way, will result into some speedy disposal, that shorter period of notice, but in a way, it would also mean a hasty proceedings, hasty disposal. Now, what could be, I'll come to little this takeaway also. There is one more provision in this 129, which is a very important one. That if you don't pay this penalty or tax within 14 days, then simply, now earlier, like this was the provision that if you don't pay tax and penalty, they will come to section 130, whereby the confiscation will happen. Now, if you see the amendment, they are saying that now the tax has gone. Unless you pay the penalty within 15 days of the receipt of the order, so within 7 days, they will serve you a notice. Within 7 days, you will have to supply a reply, and then he will pass an order. And within the 15 days of this order, if you don't pay up, okay, then all the goods or even conveyance, the vehicle also can be disposed of. It can be sold in the open market. Whatever proceeds are there, it will be utilized against the penalties and stuff. So imagine a scenario that simply because if you are not carried one single e-way bill, it can tantamount to losing your goods, even losing the vehicle of the transporter, which is very, very draconian provision. And we must consider this as a very, very important kind of a change. Now, what is relevant takeaway for us? That first of all, let's be very, very extremely careful about the e-way bills. You cannot take this e-way bill for granted. Okay. Then you may be quite serious because you would have attended this session, or you know that what are the repercussions, how grave is it. But then your staff may not know. So it's very, very essential, the clerical staff which is involved into raising the issue, the invoices, issuance of invoices or creation of e-way bills. He is well aware of all these provisions, and he should also know that in which cases e-way bills are required, in which cases it's not required. And in certain cases, you may be leaving certain portion left to the transporter, maybe part B to be filled up by the transporter. You should also be very, very careful while having the agreements with the transporters that if they do some mistakes, unwantedly, you as a business entity should not suffer, and therefore you should also make them aware, and also appropriate clauses in the agreement should be drafted well so that you do not carry any responsibility as far as this kind of draconian penalties are concerned. Also, one must know that what are the alternative solutions. If, say, for example, some e-way bills are expiring for whatever reasons, you must know that what are the alternative solutions. Of course, it's a different matter that still, after taking this due care, if you are still facing issues, we have got certain friends like Advocate V. Raghuraman sir or Ashok Batraji would help on some in some way. And there are some court rulings also which have helped assesses that, okay, for genuine errors, you cannot penalize him very harshly. So, but then as a, I would say, normal prudent business entities, one should be very, very careful. Instead of fighting those kind of scenarios, it's better that we ensure that those scenarios never come up. Okay, maybe with appropriate transaction manuals or guidance or whatever is needed for that matter. First of all, that section 130, which I was saying, that normally if you are like having such kind of scenarios where you are not carrying e-way bills, or maybe there are other scenarios also where there is some intention to evade payment of taxes, then section 130 says that your goods would be confiscated. And then after confiscation, they will be, of course, disposed of. Now, just now we saw that without even resorting to 130, because earlier in 129 there was reference to 130 that you go to confiscation and then you dispose of. Now they have taken powers under 129 that even without confiscating, they will be selling the goods, which seems, of course, our friend Mr. Raghuraman will throw some highlight on this subject. But then without confiscation, how can one can simply dispose it off when the title has not really passed on? There's a very important amendment, which seems like there is some goof up at the end of the draftsman. And we'll see that whatever amendments in the near future. But as of now, the reference of 129, in 129, the reference to 130 to confiscate, it has been removed. Okay, so this is like one more important impact. In case of like penalty also, there are again changes. Earlier it was like penalty will not be less than 129(1), but now 130 says the penalty would be equal to 100%. To reference to one section 129 has been removed. Ultimately, all in all, the provisions pertaining to e-way bills are getting tightened. That's the only takeaway I can say in one line one should be careful of. Even the pre-deposit, if you want to fight case that like penalty was not leviable, 2%, 200% is too high, etc., etc. Simply because if I'm not carrying e-way bill, you cannot penalize me, this, that. If you want to appeal, normally you have to pay a pre-deposit. Okay. Now, the pre-deposit prior to this amendment budget was 20%. 10% in CGST, 10% in SGST, total 20% was supposed to be paid of the tax which is there. Now they are saying that if at all you want to fight a case, okay, total 25% of the penalty has to be paid to the department as a pre-deposit. Earlier it was 20% of the tax. If tax has been paid, no pre-deposit because entirely it has been paid. If at all tax has not been paid, only pay 20%. Now they are saying you have to pay 25% of the penalty, which itself is 200%. So 25% of that would itself move to 50% of the tax amount that you will have to pay upfront simply to get justice from the appellate authorities. So this is like cost of getting justice would become costlier. You'll have to block your capital. So be careful when it comes to e-way bill. It can really block all your ways. Power to call for information. It was there, but now it was limited in certain cases. This is amendment not through budget, but recently it has come from 1st January. So therefore we have brought in that commissioner can ask for any damn information, which again, earlier it was confined to certain statistical information or maybe by way of return, etc. Now the powers have been widened that any sort of information can be asked for, which is a very draconian one. Levy of interest has been reduced from 24% to 18%, which is maximum. Okay, that's a good change. Also, unless you have availed wrongly some ITC, and if you're not utilized that, there won't be any interest. Okay, prior to amendment, it was the scenario where even merely for wrong availment, even though you are not utilized, penalties were applicable, interest was applicable. Now they are saying, unless you are availed as well as utilized, the interest will not be applicable. And good thing is like this change is being brought with retrospective effect. So even for the past cases, if there are certain demands which have been raised against you, you can, if you are already paid, you can file a refund application. If you are certain pending cases where the interest has been asked merely for wrong availment, you are not utilized, it is still lying in your electronic credit ledger. But simply because there is a wrong availment, therefore this can, now there is like, if there are some cases, you can fight on the basis of this retrospective amendment, they can be dropped. Okay, and if you already paid interest in the past, you may also lodge a refund claim. Scope of supply has been enlarged with effect from 1st January 2022. All the housing societies, etc., where the concept of mutuality was the base to say that GST is not applicable. Now they have tried to overcome the judgment of Kolkata Club, which was delivered by Supreme Court, that concept of mutuality is there, and therefore members and society, they are not liable to pay taxes on the services rendered by the society to members or club to the members. Now this amendment is trying to overcome. This is also effective from 1st January 2022. The amendment was made in the past budget, but they have made it effective from 1st January. Certain entries in the works contract where the concessional rate of 12% was granted. Normal rate of GST is 18%, but in certain cases where the contracts was pertaining to the government contracts, and specifically those services were rendered to governmental authority or a government entity, one was entitled to 12%, that has been done away with. So what does that mean? That various sorts of works contract services, okay, the details have been listed down in the slides, which can be like circulated and procured. In the, like say, whatever government works contract services which one was rendering to governmental authority, okay, wherein there is a stake of 90% or more, or maybe government entity, then the works contractor was supposed to charge them 12% instead of 18%. And if there is a subcontractor to that works contractor, the main contractor, then that subcontractor also can charge at the rate of 12%. He did not charge 18%. Now that concept of concessional rate has gone. Now they will be liable to pay at the rate of 18%. And therefore, now whoever was supplying to those kind of entities, governmental entities or government companies, so then they should be careful. It is now 18%. If at all, maybe some modification is required in agreement, one should consider that, or at least while raising the invoice. Of course, this will become effective once the budget gets the assent. So after that, it will get amended. But one should be careful about this. If you are a supplier of works contract services to governmental agencies and government companies. Rate of footwear up to 1,000 rupees. Earlier it was 5%, 2.5% in CGST, 2.5% in SGST. Now it has been increased to 6 plus 6, 12%. So beyond 1,000, it is already 18%. But below 1,000, I mean up to 1,000, it was merely 5%, which has been increased to 12%. So footwear makers should be aware of this. The companies who are like Swiggy or Zomato or whichever companies are there who are into like in aggregation of restaurant services, okay, which are playing the role of e-commerce aggregator. Now, instead of that, restaurant, they will be liable to pay GST. Okay, so restaurant which are like supplying food through this e-commerce applications, they won't be supposed to charge GST. Rather, these aggregators would have to take care of the GST. They will have to collect from the end customers and they'll have to pay to the government. So all those aggregators will have to take care of these things. So then like we are moving to the other session, which will be taken care of by the other speaker. So these were like the main, I would say, amendments which were pertaining to the GST budget propositions. Also certain amendments which were effective just prior to the budget amendments. Thank you, friends, for giving me a patient hearing, and over to Prerna for taking it forward, please.
Thank you so much, JC. We understand from your, I would say, entire interaction that what is important is that the compliances are done properly. The operational people, along with the taxation people, need to be given importance. Or both of them, when they are in sync on GST law front, then the companies would be able to achieve the appropriate compliances, and there will be less chances of litigation. In any case, in case there is any litigation, then definitely we are there to help. But yes, definitely the current budget, and I think we will hear it from Arunji also, Ashokji also, and then we'll come to a conclusion whether from GST angle, the current budget and the amendments, these are in which direction. Do we see that the discipline is getting increased? Do we see that this will help Indian economy to grow? Let us look at and hear it from other speakers, and then let us make our view. So now we would please welcome Arunji to provide his view, Ashok Batraji, to provide his views on few of the important amendments with respect to GSTR 1 and 3B. And also he is going to discuss a few things on the administrative aspects. Over to you, Ashokji. We would like to hear from you what budget has to say. How do you see the current GST proposals? Ashokji. So you are on mute. If you can just unmute yourself.
Thank you, Prerna, on two fronts. First of all, for the nice introduction which you gave at the beginning of the session. And secondly, providing me this opportunity where I can share my views on this finance bill with my trade industry friends. Prerna, first of all, I would like to clarify that Mr. J.S. Jogri has not dealt with the finance proposal in this finance bill 2022, but he has dealt with section 7, 129, 130 and some rate of taxes which are not part of this finance bill 2020, but these are important changes which can be brought into force on 1st January 2022. I will also be doing the same thing. I'll be dealing 3 provisions relating to this finance bill 37, 39 and section 49. And then 2 very important amendments which has come into force, that is the enlargement of the definition of self-assessed tax and provisional attachment of movable properties including bank account. Friends, if you look at this finance bill 2022 from GST point of view, so in my humble opinion, it has given 3 messages very clearly. One, the government is very keen and serious in tackling the problem of fake invoices. They have brought out number of changes to tackle this maintenance of fake invoice. They have proposed to amend section 16. Section 38 and 48 have been totally resubstituted. And if you look at the second important aspect, there are certain beneficial provisions which have been given to the SSC. 2 issues have already been discussed by JSG. Firstly, there is an amendment in section 50 with effect from 1st July 27, wherein now interest shall be leviable only when the credit will be utilized. And in case you have wrongly availed the credit, but you have not utilized the same, you are not liable to pay the interest. It will reduce a lot of litigation. Secondly, the rate of interest under section 51 was 18%, and under section 50 subsection 3 it was 24%, and that 24% interest was leviable when you are claiming undue public excess claim of ITC. Even this rate is being reduced to 18% with effect from 1st July 2017. So my dear friends, in case you have paid interest at the rate of 24%, you can claim a refund, but then that application of refund has to be filed only when these sections are notified. Third important change is a benefit granted to you for correction of mistakes, either in filing GSTR 1 or 3B by amending section 3739, which is my core area. I'll be dealing in detail. There is an excess time limit for availment of credit under section 16 subsection 4. And finally, even under section 52, they are giving you time up to 30th November to rectify your return for TCS. And more importantly, the credit note can also be issued up to 30th November. And this is the third beneficial provision. Third motto of this budget is to provide statutory support to the rules which they have made and they have already implemented. For example, quarterly month and quarterly return and monthly payment of tax QMPR scheme. If you look at 86B, it was not having any backing of statutory provision that is being done. And if you look at other changes, then you will appreciate all those changes are in this direction only. For example, if you look at section 29, composition dealer is supposed to file the return on annual basis, but in this section which deals with the cancellation of registration of composition dealer, it says in case he fails to file 3 consecutive returns, which was not the practice earlier. Quarterly return, monthly payment, I am paying a specified amount, but then I am supposed to pay only self-assessed tax in terms of the statutory provision. So they are amending that section also. So these are the 3 highlights of this bill. To tackle the menace of fake invoice, number 1, to provide certain beneficial provision to the assesses, which has been the demand of the industry. 24% is very, very draconian. Even Mahajan bhi 24% ब्याज नहीं लेते. So they have realized this, irrespective of the fact that they have taken undue credit. So those benefits are being given. And finally, I'm coming to the change which is being assigned to me, section 37. Section 37 deals with the subject of filing details of outward supplies. Friends, believe me, the document which we call tax invoice is the most important document, and this has become the most important section in GST Act. On the basis of this document only, your output tax liability is being calculated. And on the basis of this document only, the figure is being auto-generated into the books of the recipient, and it is a base for the credit for the recipient. If you don't submit this document, you cannot file your 3B. And we all know, in case I don't file my 3B regularly, my e-way bill can be stopped, my RC can be suspended or cancelled. So this is the significance of this section. If we look at the changes made in this section, then friends, first of all, they have made change in subsection 1, wherein they have put up the words restrictions and conditions. Earlier on, you have to file the dealer outward supply in such manner or form. Now with such conditions and restrictions. So the government is aware that to amend the GST law is very, very difficult. Corresponding changes have to be made in state law. Then it has to be notified. And that is why we are discussing today the Finance Bill 2022. At the same time, the proposal made in Finance Bill 21 notified on 1st January 2022. So 43A section, which is being deleted in this Finance Bill, was introduced in 2018 bill, and it has never seen the light of the day. So the government Realizing this, they have everywhere putting up condition and restrictions so that whatever notification they issue, they can justify by supporting the statutory provision. One such amendment is in 49(2) also. I'll deal with that section also. Then second way is the government has agreed that the two-way communication between the supplier and recipient, which was the base of the GST for verifying each and every invoice, which was the base for the assessees or for the lawmakers to use the word used or intended to be used, because they had linked the credit with the issuance of invoice, not with the use of the inputs. Simply because they want to verify each and every transaction, the government has considered, because of these technical impossibilities, we may have advanced too much in the IT, but still we are not in a position to match each and every invoice. So that 1, 2, 3 system is being gone. So two-way communication is not the order of the day. So that is one thing. So they say, now we will act as a judge. Respondent and appellant both has to address to the chair. Similar here, supplier will provide me the information in GSTR1, I'll collect it, and then I'll remit it, auto-populated to the recipient hand. And then I am having a superpower in the terms of section 38, where I will let the no recipient 6 conditions in which the credit is not available. TDS provisions are there in section, tax credit provisions are there in chapter 516 to 21. Eligibility, apportionment, special situations, etc. But they say if case you don't comply with 38 and 41, which is not part of those situations, even then the credit will not be there. It is not with regard to the nature of credit. It is with regard to the nature of non-compliances, either by supplier or recipient. We are not eligible for that. So now the government says the two-way communication is gone. We are becoming the judge. You both address to us and we will deal with you. Then another change is that they have removed the reference to section 42, 43 and 38, which were there in any section. So in this section also that reference is being omitted. It's a technical mistake because we all know now 42, 43, 43A and 38, which was a supply of inward supply, that is ST2, has already been do away with. The department is already done away with. This system will never come into picture, and return 3B has become return from July 1st July 2027 also. So this is one. And then they have said, kindly see, this is very, very important for the industry to understand. You have to file your GST1 sequentially. You will not be permitted to file the GSTR1 for the current month if any month you have not submitted the GSTR1. They have to be filed sequentially and they have to be filed updated. And let me deal it here itself. Another amendment which is there in 39 also, it has been made a condition. You cannot file your 3B if you are not submitted GSTR1. Just understand the significance. And once you have not filed GSTR1, 3B is not filed, we know the serious consequences which can be there. And they are, my e-way bill can be blocked, my RC can be suspended or registered. Then friends, looking to the time constraint, because I have to go and attend another section in Jammu at 5. So now I'm coming to the next section, that is 39. And I'll simply say that in 39, which is the filing of return section, they have made a number of changes in this section. First of all, they have said you cannot file your 3B unless otherwise you have submitted your ST1. This is very important. And they made it very clear that government has got a power, both under section 37 and 39, wherein they can permit a registered dealer or a class of registered dealer to file the GSTR1 even if they have not filed these forms for the earlier period. So this is very important, which you need to understand. Then in the case of non-resident taxable person, the due date of filing a return was 20th, which has been reduced by 7 days. Now you have to file on 13th of the following month. Then another amendment, you are liable to pay self-assessed tax now or any amount as may be prescribed, because we all know in the case of quarterly return monthly payment scheme, we are depositing 35% of the tax in the first month. So they, in order to give a legal backing that you can deposit this, so they have proposed this change also. And then friends, in subsection 10, they have put up this condition. With this, I'm closing this section 39 also. Now I'm coming to the very important section, section 49, which deal with the payment of tax. Friends, changes are very limited, but very, very effective changes and important changes. For example, if you look at 49.2, it used to say that you can file these tax credit can be allowed to you on the basis of conditions prescribed. Now they are saying in 49.2 also, it has to be not only condition, but subject to such restrictions also. I gave you that background, so I will not repeat it looking to the time constraint. Subsection 5 is being, 4 is being amended. There are 4 amendments. Subsection 2, I already told you, there is a technical reference of 43A being omitted. Then subsection 4, where it is a very important change with the condition, they have added the word restrictions. So that means they can prescribe the restrictions. Then a very beneficial amendment has been proposed in subsection 10, wherein earlier on you are permitted to change the cash ledger headwise. Now, in case there is some balance in cash ledger in one registration and you had another registration but under the same PAN, you can transfer this cash, the balance in your cash ledger from one registration to another registration. So I think this was the demand of the industry. In fact, off the record, I can also say people are coming to us, sir, हमारे यहाँ cash पड़ा हुआ है, वहाँ हमारी demand है, how to deal with this. I want to transfer this credit balance, cash ledger, etc. So now once it is being permitted legally, I think this is very good step. Now you can certainly transfer your excess cash ledger balance in Delhi to your Mumbai office if the registration is under the same PAN number. Then friends, they intend to insert now section 49.12 is a new insertion in section 49, wherein they say the government can restrict the utilization of electronic credit ledger. They can prescribe how much percentage of credit ledger can be used. This is what precisely is the rule 86B, 99%. Now, in order to prove that that rule is not ultra virus and it has already been challenged in various high court, they have given a statutory support to that rule by proposing amendment in section 49.12. So in a way, the department or the revenue itself is admitting that this rule was not supported by the statutory provision, because this is not a retrospective amendment. So whether this 86B will hold its place till this new section is being notified, that will be very interesting to see, because otherwise we all understand that once this section will support that rule, then those will become unchallengeable. It will not be constitutionally ultra virus. So the government will the court will certainly uphold the validity. Now, friends, I am coming to the changes which has been made applicable from 1st January 2022, not part of this finance bill. And one of the change which I have been asked to deal with is subsection 12 of section 75. Friends, section 75 is wonderful statutory provision. I have never seen that kind of a beautiful provision in any indirect tax enactment till GST was being introduced. Wherever there have been legal settled proposition of law, you cannot go beyond the show cause notice, etc. The penalty should be according to the significance of the gravity of the offense committed by the person concerned. How should the effective hearing should be given and all that. So all those provisions have been incorporated in this section 75. So for the professional, for the industry, I'll suggest them, one must go through this section very carefully. last subsection of this section 7513 also provide that in case the penalty leviable under section 7374, then other penalties cannot be levied. So very reasonable section, but the change which I am going to deal is the enlargement of the definition of self-assessed tax. Earlier on, they say the self-assessed tax in terms of return filed under section 39 is being treated as a self-assessed tax. But then what is the significance of self-assessed tax? Kindly appreciate there are two limitations with the self-assessed tax. One, the department can directly start the recovery proceedings by invoking the provisions of section 79 without following the procedure of section 73 and 74. Whenever this definition is being enlarged, so the same limitation will come. And the second limitation with self-assessed tax is under section 80, which deals with the payment of tax by installments. Section 80 does not apply to self-assessed tax. In case you admit it is your self-assessed tax, then the commissioner has no power to permit you to make that payment of tax by installment, which in any other tax, he can do so and he can give you 24 installment. Of course, it is subject to interest, but then liquidity is again an issue. So this self-assessed tax is always mired with these two limitations. Number one, it can be recovered directly without issuing the show cause notice under section 73-74. And in fact, in the case of Kabir Realty Private Limited, Madhya Pradesh High Court, if I'm right, the citation is 2019 TIOL 2813 High Court, Madhya Pradesh. Before this amendment has been brought into, has stated in this case that in case you have declared your liability in GSTR 1, as I was telling you, this is the most important document. So if you have GSTR 1 में अपनी liability दिखा दी, then you are admitting this your liability. Where is the question of any adjudication being done to that? So now they have already amended this subclause 12 of section 75, and they say self-assessed tax will also include the difference between the liability declared in GSTR 1 and the liability admitted in GSTR 3B. So the difference between the two will be treated as self-assessed, can be recovered without issuing show cause notices, and the benefit of installment will also not be permitted to this. To give an example, let us say I have declared my liability of 100 rupees in output tax liability. 80 rupees I am admitting in my GSTR 3B. So 20 rupees is the liability which is being self-assessed and which can be recovered by the department directly invoking the provision of 79, and the benefit of installment will also not be available to you. So in a way, I think Madhya Pradesh High Court gave a clue to the government, and then the government was very prompt to catch that clue and ultimately proposing amendment in the 2021 finance bill notified on 1st January 22. Now, friends, I am going to deal with last subject which has been given to me, and that is amendment in section 83. Section 83 deals with the subject of power of provisional attachment. If you look at the provisions which are applicable prior to 1st January 2022, then the power was given to the proper officer to attach any movable assets, including bank account, if there is a pendency of the proceedings. The terms are important. Pendency of the proceedings under section 62, 63, 67, 73, 74. So the scope was if there is any proceeding pending in these provisions, then when your proper officer can attach your bank account. If you look at various case laws on this, what is the meaning of term during the pendency of the proceeding? Then I think we can refer to Kushal Limited in Gujarat High Court. We can also refer to Neutron Steel by Delhi High Court, Watermelon Management by Delhi GST, Delhi High Court once again, UFV India Global, wherein the essence was you have taken a search and no proceeding is pending in terms of section 62, 63, because what is 62, 63? They're all best judgment assessments, or 73, 74. You can issue the show cause notice for non-payment of tax, short payment of tax, erroneous claim of refund, or wrong availment or utilization of credit. If it is due to fraud, willful misstatement and suppression, then section 74 is invoked, otherwise section 73. So now, after this amendment which has been notified, these sections have been substituted with chapter 80, chapter 12, chapter 14, chapter 15. Chapter 12 deal with all kind of assessment from 59 to 64, self-assessment, provisional assessment, then scrutiny of returns, best judgment assessment under section 62 in the case of non-filer, best judgment in the case of unregistered person, and finally assessment in special cases. Then chapter 14, which deal with from section 67 to 74. So that is again a very huge chapter. And then 73 to 84. Agar kahin pe bhi there has been an initiation of proceeding. What is really important is rather than during the pendency of proceeding, now it is initiation of the proceeding. If these proceedings are being initiated under any of the provision which falls under these three big chapters, so practically from 59 to 84, it is 26 section, then attachment can be done. Another important change is earlier on the attachment could have been done only of the movable property of taxable person. Now, after this amendment, that is being done. Provisional attachment can be done to a beneficiary who has taken the benefit out of the transaction specified under section 122(1). 4 situations were there: issuance of invoice without supply of goods, then receiving any supply of service without any invoice, taking or utilizing the credit without invoices, or any input tax credit in violation of the ISD, input service distributor. So this judgment has totally negated the judgment of the Gujarat High Court in the case of Validus Industries. But anyway, let us understand, now it has become a law. So the power of attachment has been widened. It can be not only of the taxable person, but of the person who has taken any benefit out of these supplies specified in 122(1), number 1. Number 2, the scope has also gone in terms of sections to chapters, and more importantly, during the pendency of proceedings to the initiation of the proceeding. These are very important changes. I think my time framework was only up to 4:45, so I try to conclude my session within the time. That is the reason I normally don't use PPT, because in case you are having the PPT, you have to finish it out. You either rush or now it is in my hands. I can shrink the discussion or I can enlarge the discussion. So my time is over. So is my discussion. I'll request Prerna that I won't be able to continue in this program because of my earlier engagement. Yes, I have to join there at 5 to 5, so 5-7 minutes I'll be there. And I welcome Shri Veera Goramanji, senior advocate. I could see he has already joined us, but I could not welcome him at that point of time because my discussion was going on. So Raghuraman sir, I really welcome you.
I'm very sorry for I had to finish my court work. I couldn't listen fully to you.
Over to welcome Raghuraman sir.
Thank you, sir. Thank you.
Over to Prerna.
Thank you, Ashokji. First of all, as Ashokji said, welcome Senior Advocate Shri V. Raghuraman sir on the platform. Let me just give a brief about what Ashokji said, and then we move on to the discussion with Raghuraman sir. Ashokji, we understand from you that there have been 3 takeaways from the current budget and the recent amendments which have come on 1st January 2022. First, few of the amendments definitely are to take the assessees to the discipline to be done under GST law. As we generally say that even not filing one single GSTR 1 or not filing one single GSTR 3B now could be really fatal to any company. So that has now come on the surface also through these current amendments. The second takeaway is that there have been few amendments which are for assessees which the trade and industry were representing, like interest amendment, when in retrospectively the rate has been reduced to 18%. And thirdly, to curb the evasion of the taxes, every step has been taken by the government. So these are three takeaways that we take from your discussion, Ashokji. And thank you so much for your wonderful inputs on the subject. Now we would like to introduce V. Raghuram sir, Senior Advocate G. He is a rank holder in CA, I mean, you name it, and he has all the degrees, CA, CS, CWA, LLB, Commerce graduate. He has been practicing as advocate and CA for more than 30 years now, and he is specializing in indirect taxes, namely GST, customs, VAT, foreign trade policy, FEMA, and may it be the erstwhile taxes of service tax and central excise. Having a rich experience of handling more than 1,000 cases, his success ratio is more than 95%. He is regularly appearing in Supreme Court and High Courts, and he has been a landmark. He has been a person who has been instrumental in getting landmark decisions such as Calcutta Club Supreme Court or Karnataka Industrial Area Development Board, which is Bangalore Tribunal decision. He has also authored various books. One of his recent release is GST and Indirect Tax Demystified, and he is a visiting faculty at IIM Bangalore. So with these few words of introduction, we welcome V. Raghuram sir, Senior Advocate G, on our platform. And now we would like to discuss about the Arunji. Arunji, your topic, we would just like to give introduction and then you please provide your comments on it. So there have been...
I was just wondering, since Ashok sir would leave, so can we take some questions from the audience if there is any for next 4-5 minutes, so that
definitely, sir.
Before Ashok sir leaves.
Definitely. Sir, there have been 3 to 4 questions which have come up, which are very important from the current budget. So first, definitely, we can take inputs from Ashok ji on the unpaid liability. Ashok ji, as you said that now under section 49, there has been amendment that from one PAN number, in case the assessee has more than one GST registration number, and there is a cash balance available at one GST, the same can be transferred to another GST after the enactment of the finance bill and after the amendments are coming into effect. Sir, in this case, there has been one, I would say a provision in between the lines wherein they say that in case there is any unpaid liability in one of the GSTs, then the transfer of the amount could not be done to the another GST. We would like to know, sir, from you that what do we understand from this unpaid liability and how this will function on the portal, or how do you see that the government will be able to allow us to transfer the cash ledger balances from one GST to another? Ashok sir.
There have been this term used, unpaid liability, at 2 places. One is this transfer of cash ledger is permitted only when there is no unpaid liability. So unpaid liability has to be there in the hands of the person who intend to transfer his cash balance. Recipient, so of course no problem because he's getting the cash ledger. I'm reducing my cash ledger balance, which can be provisionally attached. So the unpaid liability has to be seen from the perspective of the person who is transferring the balance. Although they are under the same PAN, but in terms of section 25 subsection 4, they are being treated as distinct person. So unpaid liability. Secondly, when GSY was dealing with the amendment of 5410, where the reference to subsection 3 is being gone. So now the proper officer can restrict the refund or withhold the refund once there is an unpaid liability. Now the question is, how do you define this unpaid liability? Because the proper officer, we all know how this proper officer behaves. If you go to section 107 and 6, 107 subsection 6, which deal with the appeal, when I'm filing an appeal, I pay a pre-deposit amount, 10% of the tax at commissioner level. My whole demand is being treated to have been stayed. But is it a paid liability or a state liability? Similar provisions are there in 112 also. When I pay additional 20% of the tax, rest of the demand gets stayed in terms of section 112. But that remains unpaid. If proper officer take a view, in spite of the fact you have paid your pre-deposit amount and your liability has been stayed, I will not give you a refund. I will invoke this 5410 because subsection reference to subsection 3 is gone. Now my power to withhold the refund is with regard to the whole section 54. So my worry is that for that, I'll request the government through your medium, in case somebody is listening to it, they must clarify this, that cannot be treated as unpaid liability, which has been stated according to my humble understanding. But there is a jugglery of words, it can create a trouble. So this needs clarification from you. Over to you.
Thank you so much, sir. So yes, definitely it's before enactment, if we get a clarity, it will, and in case they come up with any explanation in the finance bill or when it is enacted, it will be helpful. Now we would like to get an answer from Raguraman sir. Sir,
and I would like to leave. It's
yes,
already
sir.
52. Please.
Sir, no problem. Thank you so much for your time, and it was wonderful having you on the platform and giving your expert comments on GST related amendments in the recent past. Thank you so much, sir.
Thank you, Ashish. Thank you, sir.
Yes, sir. Sir, now we would like to get views from Raguraman sir, senior advocate G, on e-way bill related amendments which have come in recent past. Sir, section 129, 130, you are aware that those have been draconian provisions from day one. And there have been recent amendments wherein the penalties have got increased more than the tax payments. And there have been few cases wherein it is a very genuine lapse of the assessees that they have not really generated the e-way bill, or either the e-way bill is generated late. Or in some cases, there have been few breaches which have happened either of the value or of the tax amounts on the invoices. But definitely the tax might have been discharged appropriately. In such circumstances, what should be the assessee's way forward? How should they take the matter further? And in case there is any demand, then how they should look back to us, or they should understand, take our support for fighting such cases. Raguraman sir.
Good evening. Thanks, Prerna. This provision which has come in recently, 129 and 130, in the sense in its recent version, has delinked the provisions of the demand of tax and interest completely from the other proceedings. So effectively, it would mean that only if there is a violation of the e-way bill provisions in transit, then only these provisions can be invoked. The penalty only can be levied if there is a question of tax payments and interest that has to be separately adjudicated. Now, I would think, that that was a good measure, because they're dealing the tax, interest and the penalty completely. Otherwise, it was always amounting to a double jeopardy for the assessees. But what has happened is that the penalty amounts which have been prescribed seem to be very, very high, without there being any defining, criteria for a person who does. Let us say that he carries his invoice, he carries his e-way bill, but the officer is not satisfied that something is missing in the e-way bill. Let us say his classification is different. There is nothing in this section, though you have Gujarat High Court decisions and other High Court decisions which have said for these kind of matters, you cannot invoke 129 or 130, as the case may be. Nevertheless, it is still being invoked across the country. So the section 129 does not define what kind of penalty, what should be levied, to what kind of circumstances. That is very important. In Bhagavati steel rolling mills, if you see, this is what the Supreme Court said. A person who delays on 1 day and a person who delays for 300 days are treated in the same way. You can't treat the same people in this, different people the same way. So I believe that 129 as it stands today is susceptible to challenge being unreasonable, of classifying those who are substantially honest with those who are substantially dishonest on the same plane. Now, that is one portion of it. The other portion of it, which is more disturbing, which I have also observed, is that they have brought out a rule, I think 144A or something, if I'm not mistaken, where they're talking of even for a e-way bill or transgression, the time period will be 15 days. And thereafter, they are going to, if the amounts adjudicated in that time period are not paid, they are going to seize, they've already seized it, they're going to confiscate the goods and sell it. Now, through the rule, you cannot do what is not contemplated in section 129 itself. Because confiscation is contemplated only in section 130. And after giving you notice, the difference between confiscation and seizure, to put it simply, is that when you seize the goods, the possession is taken by the government. But when you confiscate, the ownership goes to the government. That is the distinction between the two. So I think this 144A is also a draconian provision, because you're not even giving him time to reply. You would have simply confiscated the goods and sold it also, even before he realizes what's going on. So these are two worrisome things in this amendment. So I would think that anybody who has a good case and who has put in his documents, either the e-way bill or the invoice is there, I would caution those assessees to be a little careful of this kind of timelines, and they would have to approach either the authorities of the High Court at the earliest point when they get to know that the goods have been detained.
Yes, sir. I think, yes, the message from Raghuram sir is that, yes, the assessors definitely should be careful. But in case there is any case at hand wherein you have the detention or seizure of the goods, then it's a very serious matter. It should be challenged at the earliest. And definitely the sections and the rules are not going hand in hand. And there will be challenges in the court. As we have discussed many times, that there is a possibility that these entire sections can be rewritten, including entire GST law. Sometimes we discuss that there are few provisions which requires, I would say, amendment beyond repairing, and therefore the entire rewriting of law is possible, especially as Raghuram sir said, in cases of like sections 129, 130, which is talking about e-way bill related penalties and confiscation. Since we have short of time, we would now first like to hear from Arunji about his views on few of the sections, the amendments which have come on ITC. In case of input tax credits, Arunji, there have been a lot of amendments, whether we talk about 2B, whether we talk about section 16, which is the base to avail the ITC. So please, if you can enlighten us on those sections and also on section 7, for 15-20 minutes, then we can take the matter further, this discussion further, and then we'll have some other question and round answer. Arunji, please, your expert comments.
Thank you, Prerna. Raghuram sir, MK sir, Jayasji, and all my friends present here, a very good afternoon to all of you. Friends, regarding input tax credit, particularly as mandated by Prerna, input tax credit side, actually there are some significant changes proposed. What are the significant changes proposed, or why it is so significant? Friends, in input tax credit, earlier we had CINVAT credit, where central excise and service tax credits were available. For that matter, even a part of customs duty credit was also available. So since that regime, or even before that, when we had moderate credit scheme under central excise, since beginning, that is because in 1986 we had introduced moderate credit scheme in India. From 2000 onwards we changed it to CINVAT credit. 2002 onwards service tax credit was also allowed. 2004 goods and service tax credit both were intersectorally allowed, so integrated. So that was the regime, and then finally with effect from 2017 we have GST. And in GST, goods and service tax both are supposed to be treated alike. So that is the evolution, that is the step. But since why I'm saying all this, in all these days, in all these earlier regimes, the basic principle which has been upheld by the courts of law, a series of judgments from various high courts and even Supreme Court, saying that once a credit is legitimately claimed, that becomes an indefeasible right of the taxpayer. It cannot be taken away from him. So the taxpayer cannot be deprived of the rights which he has already earned by way of FinVAT credit or input tax credit for that matter. Now, what was the basic principle for that to be eligible to claim that credit? The basic principle was as held by the courts of law in a series of judgments. Two things. One is tax is paid thereupon, and the goods have actually been received by the recipient, or the services have actually been received by the recipient. So goods or services, that means the taxpayer has received the goods or services and the tax has been paid. Now, how is it measured that whether the tax has been paid? It was sufficient that if I have the invoice on which it shows that the tax was collected by the supplier from me, that means I have paid the tax to the supplier only to that extent. And therefore, in many cases where there was a case of the department that the supplier actually did not pay the tax to the government, the court said that irrespective of the courts have repeatedly said that irrespective of whether the supplier has actually paid that or not, but the recipient's credit cannot be denied. If there is a short payment or non-payment by the supplier, let recovery proceedings or be initiated against the supplier, but not from the recipient. The recipient's credit cannot be denied. That has been the basic principle. Now in GST, there is a basic departure from this basic principle. What they are trying to do, this is my understanding of course, that in GST law, what they are trying to do is, apart from the substantive law, there is a procedural law also, and in earlier regime, the substantive law was contained in the Act, and the procedural part was contained in the rule. Now what they have done is, substantive as well as procedural laws both are integrated included in the Act itself. The intention of the idea is that we will not deny any credit if there is any flaw in the procedural part as well. So if there is any deficiency in following the procedure also, the credit is going to be denied. We are not going to allow you to credit. That is the plain and simple message. That is what I was trying to communicate here. So we have to be very, very careful, irrespective of the other arguments, whether those rules, those procedural parts are virus, intra-virus or ultra-virus or all that matter, for that matter, whether we can challenge it in a court of law. But irrespective of that, since we have to, whether we love it or we hate it, but we have to live with it and we cannot leave it. So we cannot alleviate it, but we have to alleviate with it. So we have to learn that basically. Since we have to live with it, we have to run our business, we have to run our stores, we have to be very, very careful so that we have lesser occasions or minimum occasions to go to a court, to approach a court for that matter. रघुरमन सर उठते हैं कि अरुण जी क्या कर रहे हैं ये, हमारे अगेंस्ट में बात कर रहे हैं, तो कोर्ट्स में नहीं जाने की बात कर रहे हैं. तो ऑब्वियसली वी ऑल नो, वी इंडियंस, we try to understand what are our rights. Always we have queries about, we are inquisitive about what are our rights, what are our duties, what are the duties of the officer, what are his rights. But no one wants to actually go to the court of law. Everyone wants to know about his rights, but he will not be interested to go to the court of law. We always try to avoid going to the court of law. But nevertheless, since we have to run our business, and we know in our country, if you ask me also, maybe in tribunal, at least 10 years old cases are pending. So at least in Calcutta tribunal, I know for sure, and I'm sure it is same with Bangalore tribunal or Mumbai tribunal or Delhi tribunal also. So if cases are pending for 10 years or more in tribunal, before that there was already 2-3 years gone into the departmental appeal and all that, litigation proceeding. So for those 15 years, if you are hanging on with a litigation, so obviously people would not like, and therefore we have to be compliant. And to be compliant, what we have to be very aware of or very conscious about is this particular provision, this particular changes which are brought in for claiming input tax credit properly. What they have done is, we need to understand 2 points. Number one, what new conditions they have brought in, and therefore in total what are the different conditions. And second is, if I comply with all those conditions, whatever conditions are given, existing plus new, is it sufficient for me to get the credit? Am I then sure of my credit? Probably that also needs to be understood. So first, what are the conditions? And mind you, 4 conditions were already there. In section 16(2), there were 4 conditions. Number 1 is you should receive the goods or services. Number 2 is you should have it, you are in possession of tax invoice for that. Number 3 is you should have filed your return. And number 4 is the tax thereon has been paid to the government. So now they have gone one step further, saying that not only tax paid to the supplier, but tax paid to the government. You as a recipient are not going to pay the tax to the government for your inward supply. Who is going to pay the tax in that case? The supplier. So if the supplier is to pay, but if you want to claim the credit as a recipient, you have to ensure that the supplier has actually paid the tax to the government. Here I would just like to point out one provision under the Sinvat credit earlier. Initially, in earlier period, in Sinvat credit, or even for that matter in moderate credit also, this provision was there that if you want to claim moderate credit, you should be sure that the supplier is genuine, he has paid the taxes. And how do you ensure that? There was a provision saying that if you know the supplier personally, or if you are aware of his handwriting, and if there is any certificate from him, something like that, then you can be said to be well discharging your duty or responsibility. So there was a responsibility cast on you that you should personally know the supplier before you take any inward supply from him. That was the criteria there. So this kind of criteria is actually not there. Later in the later days in this inward tax regime also this was done away with. And in GST also this kind of criteria is not there, but indirectly they are bringing in that criteria in a more stringent way. Now they are saying that you have to ensure that the tax is paid by the supplier to the government. These were the 4 conditions. Now condition 5 and condition 6. Condition 5th is brought in with effect from 1st January, and condition 6th is now proposed through this finance bill, which is going to be implemented soon. So what is this 5th and 6th? Actually, this 5th and 6th are part of or in continuation to condition 4 only. Because that condition 4 says that the tax is to be paid to the government. How do you ensure that? So that procedural part is also included here inbuilt here in section 16(2) by way of clause AA and clause BA. Clause AA says, in clause AA they say that it should be matched. How matched means the supplier should upload the details of such invoices on the basis of which you are claiming the input tax credit. So supplier should upload, that means matching will be done. That means if supplier confirms that this is a transaction done by him, then only you can claim the credit. That is one. And second, that is clause BA, which is proposed now, that says that this input tax credit should not have been restricted by way of an auto-generated statement under section 38. Now, what is that auto-generated statement under section 38? That relates to section 49(4) and 49(12). Section 49(4) and 12, these are 2 clauses. 49(4) is sought to be amended, which is already covered by Ashok Batraji, that they are saying that says that that input tax credit can be used subject to conditions and restrictions. So earlier it was only conditions, now it is conditions and restrictions. So that means some restrictions can also be imposed. And 49(12) says that the maximum proportion of input tax credit that can be used for payment of tax, that can also be specified, which is in Rule 86 capital B. So these are section 49(4) and 49(12). So based on 49(4) and 49(12), section 38 is also newly enacted, which says that an auto-generated statement will be created or generated, and it will be communicated to the recipient, and the recipient will be entitled to the credit only if it is not restricted in such auto-generated statement. What is this auto-generated statement? There it says that 5 or 6 different classes of persons will be there. So 6 different types of inward supplies will be communicated to you, in respect of which your credit will be restricted. What are those 6 different types? First, it says that if the supplier is newly registered for a period which is to be specified. So maybe they will come out with that first 3 months or first 6 months, something like that. So suppose it is first 3 months. That means if any person has got new registration, so for the first 3 months, he will issue tax invoice, but the recipient, you as a recipient, cannot claim the input tax credit. Now, what is the logic behind that, or how far it is within the parameters of the law? That is a different issue. That for that we will in fact listen to Raghuram sir a little later. But that is the restriction. Second, it says that the supplier should have paid the tax as is payable. He should not have paid lesser amount. Third, it says that he should have claimed input tax credit which was available to him and not more than that. Number 4, it says that he should not have utilized input tax credit in violation of 49(12) That is, say there it is said that up to 99% it can be paid through input tax credit, minimum 1% you have to pay in cash. But suppose the supplier has paid 100% in cash, so violating 49(12), so there also his credit will be restricted to you. So these are the various criteria which are all related to your supplier, not related to you. On any of these conditions, you have no control at all. But they will simply communicate to you that, look, out of your total inward supplies, these are the inward supplies, these are the invoices which are coming from so and so 5 different types of suppliers, in respect of whom you are not, your credit is being restricted, so you cannot claim it now. So you cannot claim it now, you are simply communicated, and you do not actually have any control over them. So what is going to happen? My friends, let us try to understand the impact. It is going to have a very significant impact. It's not very, not a small impact. Suppose one of your suppliers, he had a total tax liability because during a particular month, he had a total tax liability of 10 lakh rupees. So he should have utilized maximum 9,90,000 from input tax credit, and at least 10,000 rupees he should have paid in cash. But suppose he has paid the entire 10 lakhs in cash, from input tax credit account and without making any payment of cash. In that case, what would happen? Who are his recipients? You are one of his recipients, but like you, there may be 10 other recipients also. So all the recipients' credit will be restricted because he has not complied to the extent of 10,000 rupees. So because of non-compliance to the extent of 10,000 rupees, the total input tax credit to the extent of 10 lakh rupees is coming out of the input tax credit net, that is input tax credit flow. Are you getting my point? So not only you, but many other customers like you from that supplier, they are all being deprived of this credit. So this is in a way, and this is only not only this 1% issue. Similarly, if he has violated any of those conditions, as I said, so all the credits being supplied by him, credits being supplied by him through his input tax credit, through his tax invoices. So all those input tax credits will be restricted, and that will create a genuine problem in the industry of credit, of cash flow, because to that extent your cash flow will be affected, and you have to pay your tax liability through cash only because you are deprived of that input tax credit, even if you have actually paid the tax and you have actually received the goods and services. So both the basic conditions which I said, courts have time and again said that if the tax is actually paid and the goods or services are received, then your input tax credit cannot be denied. But now that is thought to be denied. Now, without going into the, again, as I said, legality, etc. of those issues, you have to now ensure that all these are done. How do you ensure? So, number one, we need to, whether again, as I said, whether it is difficult or easier, but we have to prepare a master of our vendors as to who are our vendors. We know that in some cases, maybe in some industries, there could be thousands of vendors. But still you have to prepare a list of vendors, who are your vendors, and you have to continuously monitor as to what is the status, compliance status of your vendor, each and every vendor, whether his compliance status is proper or not. If his compliance level is up to date, then only you can afford to receive supplies from him. If his compliances are not up to the mark, that means if his returns GSTR 1 and GSTR 3B are not up to date, you cannot afford to buy from him or receive any inward supplies from him. That is number one. Number two, whether you would actually like to make the payment to him in full before your input tax credit actually flows in your input tax credit account, that is GSTR 2B, I would say. That also we need to think. Earlier in the sales tax regime, we know that in central sales tax, there was a concept of payment of tax at the rate, state local tax rate or concessional rate, that is 4%, whichever is lower. So if any supplier is supplying you at a concessional rate, that was against a declaration form to be submitted or furnished by you. And those declaration forms were supposed to be supplied later on that time. So for that, what they used to do is they used to keep some deposits from you. That only when they receive this declaration forms from you, then only he will release the differential amount. Otherwise, they used to keep that differential amount to the extent of differential amount of tax, they used to keep them as deposits. So you have to actually now think whether you can introduce those kind of checks with you or not, whether you need to actually keep those deposits or not, or whether to what extent your vendor is reliable from your viewpoint. That we need to think of, and accordingly we can do our business. So whether it is in favor of your business or against your business, but you have to take care of this particular provision. That is one very, very important aspect I wanted to communicate, number one. And number two, as I said, that these are the conditions to be fulfilled, to be complied with, and more than that, is it enough now? Suppose all these 4 earlier conditions and 2 new conditions, and in these 2, one is taking all the 5 or 6 conditions, all these conditions, suppose you have satisfied, everything is satisfied. Does it mean that your input tax credit is now free from dispute, free from litigation? Even no. It's a N, capital O, no. So your input tax credit can still be questioned. So it's only, friends, as I said, not only the substantive part, but the procedural part. So the procedural part is taken care of. But on substantive side, whether at all this input tax credit you are eligible to claim as per the provisions of section 16 and 17 taken together and other provisions, whether it is actually covered under inward supply inputs or input services, whatever various other conditions are there, whether it is in relation to used in relation to your business or taxable supply and not exempt supply, or a common supply and all that, whether it is blocked under section 17(5), all those conditions are still there. You actually need to take care of all those as well. So don't be happy that I have introduced all these checks and balances. So my input tax credit is now absolutely free from this. So that is not the case. So still your input tax credit can be challenged during the course of audit, during the course of investigation, during the course of scrutiny. So those issues will still be there. This was a main point, friends, I wanted to cover. Jayesh Bhai has already given me an alert. So I just would like to touch one more point, that is regarding this interest availed and input tax credit availed and utilized. Now, friends, mind you, we know from day one after introduction of GST, if you have wrongfully availed any input tax credit, according to the department, they are issuing notice to you saying that this input tax credit you have availed wrongly, so you reverse this credit along with applicable interest. And we know that many such notices have been issued. In such, and what should be your stand on that? We have already been taking a stand that no, I may reverse if I actually agree to that it is not eligible, so I may reverse, but no interest will be paid. Why interest should not be paid? In those cases where I can say that my input tax credit I claimed, but this to the extent of this amount, I have never utilized it. So in my input tax credit ledger, this is always there in my balance. If that be so, then I have always been arguing that no interest should be payable, because actually interest is on utilization of the cash, the amount. If I have not utilized that amount, so to that extent, no interest should be payable. So this matter has been a gray area in GST. In earlier regime, again, this has been a settled issue, that until unless you have utilized it, no interest should be payable. And on the same logic, on the same ratio, on the same analogy, we have been arguing that no interest should be payable. But thankfully here, the government has accepted our views, the concern of the trade industry, and they have now proposed a retrospective amendment saying that, okay, to the extent of input tax credit wrongly availed and utilized only, I will charge interest. If it is not utilized, we will not charge any interest. And number two, the rate of interest also, in these cases, earlier it was 24%. Now they are saying that no, since day one, we will charge it only 18% and not 24%. So the rate of interest is also rationalized, number one. And number two, this credit taken and utilized, both these clauses, that is also introduced. So if any of us have any such matters already there pending, or maybe earlier we have already paid interest at the rate of 24% or paid interest where it was not utilized, we can review those cases and take it up again and reclaim the benefit of what we have already shelled out. So I think, friends, those were input tax rate related issues. Now it's better, I think, that we hear from Raghuram sir on his expert comments on various issues which we have already discussed, or some of them maybe which we have not yet discussed, but definitely let us take benefit of his deliberation. Thank you very much.
Thank you so much, sir, for the marathon session that you have deliberated on few of the important aspects. I think a few of the most important amendments in this current budget on GST front has been on the ITC front, wherein they have somewhere or the other, as Arunji said, a lot of conditions and restrictions both have been imposed in the act itself. And it's going to be really a difficult, I would say, argument wherein you have to go to the courts of law. You have to knock the doors of the court only in case you want to challenge the same. Otherwise, you have to comply with it. So there is no choice either on this way or on the other way. So you don't have a middle way that you be silent. I think that was the message from the past finance bill as well, and the current finance bill also gives the same message that you have to choose your path, whether to comply with it or to go to the courts. That's how we have to look at it in GST law. There have been, as Arunji said, on ITC front, the restrictions are going to be much more stricter compared to the earlier times, and everything is going to be dependent on the supplier. So the recipient, whenever he has taken credit, until the end, I would say, jokingly, I can say that even until the death, you're not sure whether the ITC which you have claimed is the correct one or not. Because there can be few situations which can come in later on, and the ITC of the supplier could be questioned at a later stage, and then recipient's ITC which has been availed as well as utilized could also be questioned later on. So there could be few very finer issues which we can see from this finance bill. Moving on to few of the questions which we would like to discuss before we end the session. We would like to have a few of the expert comments from Raghuraman Sirji, and also, of course, from other speakers, and especially from Mahendra Agrawalji also on the macroeconomic point of view. So let me first start with GST, as we are already deliberating on it, and then we'll end up the session from macroeconomical questions from Mahendraji. So first question would be on the legality of a few of the sections which are getting into every finance bill, I would say, to overrule few of the Supreme Court decisions. Sir, in the current budget, though we have not discussed much about the customs amendment, but we have seen that the entire amendments of customs are towards, I would say, removing the effect of Canon India's decision of Supreme Court, where many amendments on administrative front in customs law, so that the concurrent powers are also given to two of the officers to look into the matter. So just to get the comments that whether this kind of amendments, can it be challenged in the court of law, and how legal are these kind of amendments under the GST law also, and also the customs law? In GST law, we have seen the Calcutta Club getting overruled by Section 7. And now this Canon India, the entire decision, they are trying to settle it down through the amendments. Raghuraman sir.
The Canon India's judgment, which is sought to be implicitly overruled, I'd say, because they are bringing about set of amendments in the customs law, which would make it seem to us that what really was the Canon India's judgment, simply put, is this: I file my returns with a particular officer. In customs, I file the bill of entry to import certain goods. The commissioner or deputy commissioner, as the case may be, assesses my tax returns. Like in GST, I have either the state authorities or the central authorities who do my assessments. Now, when the reassessment is sought to be done, who can do the reassessment? This is a simple question. Can it be done by any Tom, Dick, and Harry, or it should be done only by that officer who did the assessment in the first place? This is all the question is. So the Supreme Court said, when you say the proper officer, or when you use the term the, it has to be only that man who did the assessments, not any other person. This is the ratio in Canon India's case. So now what they're doing it is, now they're trying to bring about multiple amendments where they say, a validation act, as they call it, saying that whatever was issued earlier is valid. Whoever issued those notices, that also is valid. This is like, your omnibus clauses, which are introduced in many legislations, where they don't go to the root of the problem. Here they've tried to, also amend certain other sections, because Supreme Court also said you don't have powers to do this. You notify officers, and those things they have tried to plug. But there are two things which are of consequence to us. What the Supreme Court said was, if you invest the powers with more than one officer, it will lead to chaos in administration. So, prospectively, they are trying to bring about section 110AA, where they say that if the audit or the intelligence of officers do the investigation, further proceedings will be transferred to the officer who actually did the assessment. This is a very, you please see, if the assessees had not challenged, we would not have got such a relief. Even if it is retrospective, they are doing the validations retrospectively. Prospectively, you see the advantage that has happened. Now the intelligence officers and customs, the audit officers and customs cannot force you to make payments. They can only do investigation. They have to transfer the file to the officer for the purpose of assessments. So prospectively, this canon is going to help us. Now, retrospectively, this Validation Act can be challenged on the ground that the basis of the decision has not been completely overturned. What is the basis of the decision? One important observation Supreme Court said is this: you can't invest two people with the same powers, because if that is done, then there will be chaos in administration. And that is exactly what has been done. That portion of it, they have very cleverly not touched. And that portion can be challenged by a validation. In fact, all the pending petitions where stay has been granted, we will be moving amendments to the writ petition to challenge the validation acts. How far we'll be successful, only time will tell.
Definitely, sir. But yes, definitely, as we discussed, there have been few amendments, and it will help the assessee in the longer run. In the shorter run, during the transitional phase, one has to go to the court and challenge the provisions. Now, we would like to also hear from you all on the cancellation of GST, because as we discussed, now the takeaway from the last budget and the current budget is that one of the returns, if is not filed, the assessee is facing draconian provisions, even including the cancellation of registration. In that context, we would like to know that just because one return is not filed, one 3B or one GSTR 1 is not filed, and if they come to show cause notices and cancel the registration and close the business of the assessee, how far is it legally valid, and how the assessees, because it's very normal nowadays to get the show cause notice for cancellations just like that, and it has become a very routine procedure as compared to the actual adjudication proceedings, the way it should happen. So how assessees should look to it, and how they should practically also close the chapter, and how one should challenge these things in the courts of law. That would be the questions to Raghuraman sir.
Yeah. Prernaji, I think we should understand that you cannot put your foot in your own mouth. And this is exactly what is happening. What the authorities should be careful, I would say, is that if they're going to cancel my registration for non-payment of taxes, what really stops me from closing down the business and starting a new business in some other name? I think they should have this much of intellect to understand that they should recover the taxes first. If they feel that somebody has not paid the taxes, let us say, the best thing they can do is to keep his registration alive and continue. By cancelling his registration, yes, there are some large assessees who will be seriously affected. I don't say no. But there is in law, coming back to the legal points, which I would like to say, there's one aspect. There's in law called, what is called doctrine of proportionality. Now, you can't, for small things, do big things in retaliation. So let us assume I have not paid tax for a month. You can't immediately cancel my registration. That will be disproportionate. So I think, wherever cancellation of registration is there, some procedures now have been put in place. If you can get it sorted out through your appeal mechanism, well and good. If it can be done within a quick period of say 3 months, 6 months, well and good. But if it is not going to be done within that short period, you don't foresee it, then you have to go to the courts.
Definitely, sir. So yes, there is still a hope that once you have completed and you have, as you said, there are few cases wherein even the cancellation has happened, even the time limit has expired. In those cases also, there should be some way out, and the persons can definitely knock the doors of the court if required. Now we would like to hear on one of the important aspects relating to the time limit of 30th November. There has been an amendment with respect to the time limit to be changed to 30th November as compared to 20 October. So in many of the cases, it was, for example, whether it is availment of ITC or it is credit notes, issuance of credit notes, the time limit for taking the credit or issuing of credit notes and reporting it was the due date of the September, which was generally 20 October of the next financial year. Now that has been changed to 30th November. So one of the questions which arises is how to interpret this timeline of 30th November. Do we look at it that it will be the last date to avail the ITC, or will it be that the November return, which will go in December, that is the date that one has to look at to avail the ITC?
So I would look at it this way. The amendments which have been made, to answer your question simply, they have only specified a date. They have not said returns for the month of November by 30th. They have not said anything. So it simply has to be credit which has to be availed before 30th November. Where is the question? 30th November or annual return, whichever is earlier. Where? No, I do not know if this was discussed because I unfortunately had some matters. I joined late. My reading of the GST amendments show that this has section 16 operates on your books of account. Section 41 operates for taking the credit in your returns. There are absolutely no restrictions in section 41 for taking credit except non-payment of tax. So there is a disconnect between section 16 and 41. Because section 16 and all these amendments are only in your books of accounts. They have nothing to do with the returns which are being filed, unfortunately. So I would view it this way. The date would be 30th November in your books of accounts or annual return, whichever is earlier. And as far as all the amendments which have been made in section 16, they have absolutely no impact on the availment of credit under section 41, which deals with how you take credit in the returns. Because if you see the wordings of 41, they say availment of credit. So you have two parallel provisions for availment of credit, section 16 and section 41. Section 16, you have to, by implication, say it's in the books, because section 41 says it is input tax credit in the return. This is how I would view.
Okay, sir. Very different dimension which has been given from Raghuram sir on the perspective that how do you look at the ITC availment. So there can be a possibility to say that ITC availment still runs through the books, not directly through the portal. So that's a very different dimension and we respect them. Sir, can you also touch upon the quarterly return filers, Raghuram sir?
Can you highlight what exactly you want me to tell?
Yes, sir. So for quarterly return filers, now there has been also one about the amendment. One of the amendments is on the cancellation of registration that for composition taxpayers. Now there are consequentially, if you are not able to file returns for 3 tax periods, then rather one of the annual return, if you have not filed for 3 consecutive tax periods, then you will not be allowed. Then there will be a cancellation no show cause notice. So in
also
that
for this credit notes and all these things like rectifying mistakes or taking ITC.
Yeah, sorry. Yeah, Jason, you want to add something?
Yeah, basically, we talked about that 30th November versus the annual return. Then there is like, even they have talked about the second quarter, etc. So for quarterly return filers, like what could be the last date to avail the ITC or even to issue the credit notes or rectify their returns? 37 months.
That is only for the quarterly assessment.
Yeah. We have discussed about the other normal tax filers,
Yes.
but these small ones.
The quarterly return filing, it's actually now, there doesn't seem to be any express provision for this, or it is I am not able to see how this 30th November will, impact these people. Reason being, my quarterly returns, when am I going to file?
Generally on the, after the quarter is ending, then on
Yes,
the next
then
month.
I'm given that time. So you
Yes, sir.
split it into quarters. Practically, I was looking at it April to June by
Yes,
July.
sir. Yes.
July, August, September by October. Right?
Yes,
Then
sir.
I will file my next quarter only in January. So therefore, it has to be that whatever credit I have missed in the entire year, last year, I can go up to November 30th. Whatever I have missed in my returns, in my books for the whole year, I can go up to November 30th of next year. Just like any other assessee can do. Just like any other assessee can do. And he need not have reflected it in the first 2 quarters at all. He can simply take it in his books by November. It is, in my view, as I've told you, it is taking in the books. Right. And it will be reflected in your quarterly return for the months of October, November, December in January.
Okay.
This is how I would interpret it. There is no other way you can interpret this.
In fact, sir, not only quarterly returns. In case of composition dealers, it is annual returns now.
Yes.
Yes, sir.
Only thing there is, I think they can't take any credit and pass on any credit. So composition dealers, we don't need to worry really about them. But for these people, it is a concern, because how will I show the November 30th date when I'm not even filing return in November for them? So there you have to read the law reasonably, and it has to be that I take the credit in my books before November 30th, or to that extent, even assuming so, I take the credit in before November 30th, even in my electronic credit ledger, but report it in my January when I file in January. The returns for October to December in January. This is the only reasonable way you can look at it.
Right, sir. Definitely. So yes, what we are trying to say is that the time limit, you have to read the law reasonably. So time limit cannot finish off in case of quarterly in November per se. But when you are filing the return for November, that is the time that you have to see, which is January. And then
actually,
in January,
you have put it better than me. Right.
No, sir. Yeah, thank you, sir. Thank you for your expert comments on quarterly also. Now we would move to Mahendra ji. Mahendra sir, we would like to understand from you, how do you see the future of renewable energy in the current budget? In fact, last budget also, there was an emphasis on the electronic vehicles also. And also there has been a discussion around the world on the environmental front. So how do you see the renewable energy sector, and how do you see the growth of it in India in the context of current budget? Mahendra ji.
You see, even if we take our targets for solar, which is one of the sectors in the renewable energy, if we can touch upon that only, we are talking of generating 5 lakh megawatt of solar power in another 6 to 7 years time, or max by 2030. Now this itself is a huge business. Today we may be having maybe around 100 to 150 gigawatt, or maybe 30% of what we need to do. So creating an extra capacity of more than 3 lakh megawatt in next 6 to 7 years itself is a huge investment. But because today the cost of energy from solar plants is much lower than those generated by hydrocarbons, whether it is coal or gas or whatever it is. Ultimately, everybody will prefer to have solar. It is renewable, definitely. It is not polluting. It will move us towards our zero emission targets also. And besides generation, which itself is a huge business, there will be a large business if we can capture the entire value chain. See, manufacturing of components, manufacturing of panels, going back to solar cells, going back to wafers, and all those kind of things. So it provides an immense opportunity in this country. We can, this is a not only a multi-billion dollar, but multi-trillion dollar opportunity in India. So this is one of the renewable sectors. Others are, of course, hydel and other plants. But solar, I can see a huge future for solar energy in India.
Definitely, sir. And as you rightly pointed out, that solar energy can be stored and then it can be distributed across world. Then India will be in a better position to get profits. Also,
not only generation, besides generation, it is also integration with the grid, which is another business. And of course, selling solar power, which will be, today solar can be generated at 1/3 the cost of generation from hydrocarbons. And tomorrow, with efficiency improvements, it can come down to about 20% cost of hydrocarbons. So just see the kind of, you can get cheap energy, immense amount of energy, because till sun is there, you will get solar energy. That's not an issue.
Definitely, sir. And we are in that advantageous position being in India, having all the geographical positive conditions.
Right.
So yes, sir. Thank you. The last question for the entire session, I would like to ask Mahendraji, that what are the business opportunities that you see in India, considering also the current budget, and even otherwise, looking at how the pandemic has shaped India, how the digital economy is coming in front, and also we are looking at it in budget also, that various amendments are relating to physical infrastructure and digital infrastructure related developments. So how do you see different business opportunities in India right now?
See, if you see in this budget, of course, infrastructure, there is a lot of emphasis on infrastructure. That itself is a big business, because investment in infrastructure and then getting returns out of it, it's a long-term business, of course, but it requires, it can be done either in the private sector or even by PPP model, which government is open to. So this definitely, whether it is in logistics infrastructure, transport infrastructure, or even creating multimodal logistic centers or parks, or this will not only save a lot of cost, but improve or increase the entire or the total efficiency in the system. So that is definitely one of the emphasis of the budget. Second thing is that, with the large scale or large pool of technicians and engineers available in India, I feel that there is a big scope in producing engineering goods, advanced engineering goods, whether it is auto components, whether it is artificial intelligence, whether it is, other kinds of engineering goods. All these kind of things can be produced here in India, because not only we have a large pool of technicians in India today, we are also, churning out large number of engineers every year from thousands of engineering colleges in India. So that is definitely, I see it as a big opportunity. And when we are talking of skilled engineers and skilled technicians, automatically education, because there will be a change in the education systems, and skill development will be having a big emphasis. So that also will create new business opportunities to create skill development centers. And so when we are talking of other skills, I think in India we have a very big pool of, or very big expertise available in even financial, legal, and other professional services. So this also can be used internationally, because the cost of services provided from India will be definitely much lower than the similar kind of services available in Europe and US. So they can definitely, like today, IT services are being outsourced to India. Maybe these kind of services also can be outsourced to India in a more economical way. So that, of course, is there. And the last but not the least, our biggest sector where largest number of employment is there, agriculture. Improvement, advancement, modernization. See, it is estimated that if we modernize our agricultural systems, we can produce 3 times of our present output. Just imagine the type of that we can feed maybe half of the population of the world by producing 3 times of what we can produce today. But then the storage, the distribution, export, lot of it will involve, it will create new business opportunities, not only by investing in agriculture, but also by providing other related services to agriculture. So these are some things, but there are a lot of other things, life sciences and pharma industry and a lot of other things. But time being short, I think these 3-4 things require a lot of attention and will definitely be the things of future.
Definitely, sir. So a very broad perspective for India, starting from rural India, wherein we have agriculture as the main sector, which is now being highlighted in a modernized way, and then taking it to the end wherein the IT infrastructure will be developed. So thank you so much. Wonderful insights on the budget also. And India's future is bright. That is what we can say from this entire workshop. So we would like to thank Mahendra Agrawal ji, V. Raghuraman sir, Senior Advocate sir, Arun Agrawal ji, Ashok Kumar Batra ji, and Jayesh Gogri. All the speakers, you all have given us wonderful understanding of the current budget and the future of India. So thank you so much for giving entire knowledge pool to us. Also thanking you to our admin team, and also thanking the viewers for their patient hearing. Definitely we would be here to answer your questions. In case you have any questions, you can always put it to the chat box here, and also you can put it to us at support@gsccrossborder.com.
And thank you, Prerna, for very nice moderation. Thanks a lot.
Thank you so much, everyone. Thank you, sir.
Thank you, everyone. Thank you.
Wonderful.
Thank you, everyone. Thank you.
Thank you very much.
Thank you.